Hi, hello Hassan. So I'll begin. Looks like it's just you and me today. I hope I am audible, and so let's begin. So we'll start with the regular reviewing the week, and this week has been basically this week has been a sideway affair, and so a quick uh, cursory look at all the major indices tells you that mostly this week has been a very narrow range candle and a candle which is housed inside the previous week's candle. Okay, so in Nifty also it's a narrow range plus an inside bar, right? So basically, this whole week market was in a sideway consolidation, similar candle here. S- um, So CNX PSU was the most, like ugly looking, although it's just minus 3-4%. And again, it might seem that it's starting to underperform, but I would say it's just basing very constructively. This is basically the first T minus 14%, and anywhere 40 to 60% of that, which is my 15. So 50% of this minus 15 would be 7.5. So anywhere between 6 to 8% is a healthy contraction in my opinion. Okay. So most of the indices look like this, which is basically going sideways, sideways, small bar, sideways, small bar, sideways, small bar, sideways, right? So now the question is, this was generally like the third or fourth week where market climbed continuously higher, and the the structural tendency would be uh, yeah, so structural tendencies of the markets in any time frame you see is like to go into a momentum burst of like 3 to 5 candles. Okay, and it is going to be interesting to see if this guy moves more sideways or shows some downtrend. It's very difficult to sort of foresee that or predict that what way things can go, and especially um, looking at the macro, which is not macro, but the upcoming election results. Although I don't believe that that would uh, uh, impact much this one, but it will be interesting to see. But in general, that is how our markets have been. So quickly looking at the custom indices, which is more interesting. So Chini, sugars were sort of finished the first round of contraction in my opinion. So the first T is complete, and we'll have to see, like the second contraction, how long that will go. Um, Adani, although apparently the court case and all stuff looks okay, but still, I mean, this there is no real strength in it still. Okay, and so only a couple of individual names, Adani names, like Adani Power in particular, is a stock which is showing strength. So I would not be very interested in this yet. um, the chemicals after this meek bounce are again like going sideways for 2 weeks. um, so shipping in general this week was showed some level of strength, and so one can expect that this, I mean, in the coming week, next week, move which will take it to sort of the O'Neill pivot might come. mm, these guys, which is basically the brokers and stuff like that, are very strong. The leaders are right now paused, I believe, Angel One and couple of them, but some others are now firing. So today, 5 paisa broke out, and so again, I think IFLC also sort of gave a bounce. So in general, the this is one of the most bullish. groups, and so uh, if you I mean new fresh entries can be hunted in groups like this. Paper is still pulling back. Yeah, railway was also similar to how the broader markets behaved, sort of tried to push up, but again was stunted and like sort of a doji formation. Mm, so this is housing finance. Housing finance are going sideways after a lot of up move, and so I will be curious. I will be like very interesting to see how these guys pan out, right? Um, and again, I believe that this is just start of a very long term up move, which is basically in most of the PAC kind of stocks. So again, this is the custom index for the life insurance companies, and this both has public sector as well as the private sector, and you can see that last 2 weeks have been really nice. And if you remember, we also identified the first up move here. If you remember, in most of the HAMB scanner, in the sense the weekly momentum as well as the BVHB, the base breakout with high volumes on a single day, most of these names fired on the same day, and then after a couple of days of pause, yesterday or today I think also they fired again. So that's how things move. And if you look now, the difference between the private players, so this is the private players where I have Star Health, ICICI, HDFC, and they are still sort of in the base, but uh, in my opinion, like it's gonna break out. So one scenario is gonna follow through, and the other scenario is like make a higher low and then eventually break out. But the sector strength looks to be coming in. So an opportunity here, to place oneself for a longer run. But if you already see the public sector names, they are already broken out. And in the public sector, I have LIC, NISEL, JICRE, and SBI. Um, so really strong sector, and for a positional kind of player, still there is like time to place themselves in any kind of pullback will be a viable pullback. um, Jewelries are still strong. uh, yeah, so that's all for the custom index. um, uh, US also looks similar in the sense that they are, I mean, S&P 500 look extremely good, but the other guys also now seem to be low. So this is in price action terms, this is called uh, the momentum is been losing the momentum, right? So if you see 1 2 3 4 weeks of continuous movement, but with similar kind of volumes, the price move, so this is the cause and the effect. The effect has been smaller and smaller with time. So that means that the more you go off from the bottom, there is more supply coming in. So people who bought here are obviously like selling, and the selling has been very slowly increasing. And at some point of time, the selling will be so much that the supply will overcome the demand, and we will have a pullback. Now before that time, before that comes, if there is a renewed demand coming in, then it will eventually break out. So it's very it's not something set in stone, right? It's very dynamic. And so yeah, that was the broader index. Like I said, that this week has been a week of sidewaysness, sort of uh, digesting the gains of the last 3 weeks. uh, and I mean, worst case scenario in my opinion would be like a handle. If you say that this is a cup, then a handle could last for a couple of weeks. But in general, there is nothing to be bearish at this point of time. What's the time? Okay, right. So now let's go and see sector rotation. This week's star player was textiles. So there are a couple of ways to see this. One is like the absolute average performance by all the players and last 5 days, which is roughly a week. If you see textiles on an average moved for 3.46%, which means that in the last week or so, textiles did really well, and the worst guy was bank. So textiles look good, and also individual. If you see the names, a lot of them did actually um have. So half of them are around the all-time highs, and half of them are just coming up the out of the stage two basis. So if you want to play, then you can like diversify. Okay, I will choose like 50% in players which is already at the all-time high and they are like absolute leaders, but money can also be made like playing stage two breakouts, right? So that is basically O'Neill versus the Stan Weinstein kind of dichotomy there. um, so in terms of index strength also, if you see, CNX reality still holds very strong, and even this week also it was the index which moved the most, 1.4%. Um, Another way to judge sector strength and rotation is to see is what percentage of stocks from that particular sector moved 10% in a week. Okay, so if you sort that by like this, so this basically says that 17%, 17.65% of all textile names had a week of more than 10% this one. So which means that again, textiles are really strong in this week, right? And then if you want to look at individual names, you can just click textiles here, and and you can see that in here, uh, you can again sort in the 21 day. You can see Nandan Denims, Ginny Filament, Nahar Spinning, Nitin Spinners, Vishal, all of these guys, uh, VTL, Shivatex, these guys, ICIL, they have done well, So that, and the usual suspect is basically the CNX reality. Okay. So one particular this one, although QSR doesn't have that many names, but if you see, QSR was languishing at the bottom, and now the ascent has been phenomenal. Like not phenomenal, but um, at least the curve, the slope has been rising, and so if you then see a couple of QSR names, you might also find some good names sort of setting up. Okay, so this is basically how you hunt for names going forward, possibly. So that's about it for sector rotation. And let's visit the Homma momentum score. And I have made this guy public now, and I have also shared the link here. Okay, so, and if you don't want to go anywhere, if you just want to look at breadth only, I mean breadth, momentum, trend, all of them together in one page, this would be the simplest page. And I promise I'll not add more stuff to confuse you. But again, just to freshen up how to read this, is basically I have simplified into three different time frames. This one's a short term one, this is a medium term one, and this is a long term one. Okay, now for people who want to look at numbers and all, this basically tells you, so this is in numbers, and also it's in graphical format. And so this is basically percentage of stocks which are above their 20 SMA, this line, and uh, this what is this color, man? This color is gray, so the gray color is the SMA 5 of this, right? So whenever the actual 20 is above the SMA, that means that it is increasing. So you can see that the cross happened on 27th, and only 2 days ago this sort of came down, uh, and once it starts to go downwards, then we know that okay, the short term trend is now decreasing. But in any case, uh, if even if it is decreasing, but it is above 50, which means that still 50% of the stocks are above the 20-day moving average, means that the breadth is strong, still above average, right? Similarly, this is for 50 and this is for 200, okay? And this is very short term. So if you are someone who has a little long term positional view, as long as these guys are above 50 and trending up, although this guy can come down, that is actually a buy in the dip opportunity, right? Similarly, momentum again for the three different time frames. um, always always sort of try to take position when we are dipping and going up in the short term momentum, right? So last 5 days or so, the the market had been was in a sideways, and also so momentum was already very stretched right now. Probably it could take some time, to again, so by that time it might also dip, but again, as long as it's above zero, still okay. All right. Now I have now added three different stuff here. Now that is because, so if you so this is the momentum indicator, and which is directly derived from the ADX indicator. So here what I have done is, what percentage of stock is above ADX 25, which means like they are in a stronger uptrend, and not just that, the ADX value is also rising, right? So this again very nicely sort of aligns towards the broader market breadth. And again, like from the 26 ka low, there's been like a one-way rally, and we are right now just uh, pulling back. Hopefully we will again shoot up more. And the same graph, you can also see this in a weekly time frame, okay? So sometimes the daily chart is very noisy, whereas when you look at the same data on a weekly time frame, you will see sort of a very smooth curve. And so I have put them side by side, but they are controlled for the time period. Now this is something new, and this is basically a data which directly copies Pradeep Bondey's 5-day ratio and 10-day ratio from its market breadth. So what? So basically, this is 5-day average of net 4%. Okay. So and this is 10-day average, which means that last 10 day ka 4% up, divide by last 10 day ka percentage of stocks with 4% down. And what Pradeep says is that whenever the number exceeds 2, the basically the ratio exceeds 2, that means a bullish turn of things has happened, and whenever it goes below zero point 0.5, things will be bearish. And so if that is to be followed, then again, this is 5-day and 2-day. If you want, you can just like unclick one and click another. I have just put both of them together. So if that is the case, even in recent downtrend, it sort of never went till zero point 0.5 as well. So again, these are things, these are like, it has worked for someone like Pradeep Bonde for last 10-15 years. This is something which I also want to test, and sort of like you have seen that this is a work in progress. Some of the things do work. Like this is a very simplified way of tracking momentum for sure. But I have also been trying to work on a score, like something called a momentum score, and I'll discuss a little bit about that. Again, you don't have to like do the follow that right now, but so what I have done is, like, for short, medium and long, I have derived to a score. Okay, the maximum of this will be 100 and the minimum will be 0, and it's basically derived from a 7 pointer score. And how I score them is like this. Where is that? So if 5 is greater than 20, or basically for the first is, if both of them are above, if this is above 50, then it's 1. If it is below 50, then that's 0. Similarly, above 51, below 50, 0. If 5 is greater than 20, add one more. If the 20 is higher than the 20 period 5 SMA, then add one more. Momentum, this is higher than 0, add 1. Momentum 20 higher than 0, add 1. And if momentum 20 is higher than its SMA, add 1. So the total, if you add, there is 7 things, and that becomes a maximum value of 7. Whereas if you yeah, so the minimum would be like 0. So below 50, 5 is lower than 20, below 50, 20 is lower than the SMA, below 0, below 0, and this is lower than this, right? So that, so so like that, if you see the score, uh, and so you will yeah, good. You will find, like, things have been okay in both all the terms. So again, this is a very thing which I am like trying to build, still a work in progress. I will not ask you to follow this, but I'm just showing you that this is something I've been following for some time now, and we'll try to see how the data looks like uh, in historically as well. Okay. uh, Also, if someone can come up to help me with the Excel, because right now I'm actually manually putting these things, and I am not a data guy as such. I don't know how to code these things. So if someone has any idea about how to do this little mechanically, it would be really helpful. So next thing I had to discuss today was about position sizing. Okay, so let's chat about position sizing then. Uh, so position sizing, right? So you have an account which is 100%, right? So in general, as a swing trader, the sweet spot. So let's talk about different school of thoughts about how to go about position sizing. Okay, so one school of thought is like, you take each position as they are like separate events, and whatever position you take, irrespective of like whatever stocks you choose, they will have a similar probability of working in your favor or working against your favor, right? So in that case, the best case scenario would be to just position them equally, like let's say 10%, like whatever position you take, you are taking 10%. The another school of thought is like, okay, uh, you can also choose to take all positions equally, but the position size can be 5% of your account, right? And a little bit extreme would be like 20% of your size. Now I think these three numbers are the main sort of numbers which one can use. Now again, the first school of thought is like, whatever position you take, they should all have similar probabilities, or they should all have like this, they should all be like A1 setups, and that's why there is no edge in like positioning one higher than the other, right? So that is one school of thought, and that actually works to begin with, and it sort of makes things a lot simpler. Okay. So now which one is better to use, right? This is actually again very specific to traders. Some people with huge accounts will not be they will not be very they will not be very it will not be easier for them to take a big chunk, which is like 20% of size at one go, whereas small accounts can do that, right? So I think just pick your sweet spot. You can also go like, if you have a relatively bigger account, you can say that all my size will be a multiple of 5%. That's also a very good way to go, right? So a multiple of 5% can be 5, 10, 15, or 20. Again, don't go beyond 20, because beyond 20 will be like, again, if your entry points and all are not very perfect, then one trade result will bear a higher risk to your account size, right? So now let's say you take 5% for each, then you can have a maximum of 20 position, right? So 25 is 100. If you take 10, then you can have a maximum of 10 position, right? And if you have 20, you will have a maximum of 5 position. Now also depends, like what kind of a trader you are. If you are someone who can spot opportunities very quickly, like opportunities coming for you is not a bottleneck, then you can actually go for 5% and have 20 open positions at one point of time, and quickly, like, take profits from them. Okay, so so now generally what happens is, this is like 5%. If you are entering a position, let's say for 5%, okay, let me go and give you an example. And so for example, I'll give you my the one which is working best for me right now in my trade. And so for example, I am in Alberta Davis. uh, I'm in Alberta Davis. My position size is about 8.5%. Okay, so and again, like I use my personal choice is, before explaining, I will explain what is my preference, right? So so my preference is same thing, right? I want to sort of, my position sizing principle is like 5% से नीचे generally you don't go, because even if you get a 10% move in a 5% position, that barely moves your account by 0.5%, right? So it doesn't make sense. Okay, and and therefore if you have a position size of 5%, it also doesn't make sense to take partial profits. Like let's say you have a 5%, like I have right now 8% in Alberta. Let's say it was 5%. Okay, so now, so this was my entry somewhere around 909, and then right now i have I have like 11% in Alberta, and this is 11% move for a swing trader is actually a good move. So, and this from from the point of view of an R multiple, this is also definitely like, ayo, not this. Arre? Yeah, so sort of my open risk was around 5%, and right now I have a risk reward of 2x, right? So let me just cross check this. So Alberta is like, stop loss is around okay, 9%. 9% was a little high, and so that means that I have a 1 is to 1. I have a I have a 1 is to 1 hour profit, let's say. But again, like 10%, 11% is still a good place to sort of de-risk your trade. And the best way to de-risk the trade, which I generally follow, is to sell 50% at an extended level. Let's say like tomorrow there is another a big candle and say 16%, then I will sort of de-risk it here. Generally sell 50%, and the rest you then put the stop loss to cost, so that, like, okay, Alberta as a trade has been a trade which is above average trade for me, let's say, or at least like an average, goes in a win column, average win column. Now if you then size your position 5%, uh, it be, it becomes like futile to sell half, then only 2.5% sort of remains, right? So that is why I generally try, if things are all good and I have like it's not like a hit and run trade or something like, a time pass में ले लिया, चलो देखते हैं क्या हुआ. If it is not that kind of a trade, generally I try to position size 10%. So 10% is my go-to size, and 10% is also then a multiple of 5. So when I think about multiples of 5, position sizing becomes a really simple for me. And now what I can do is I can modulate this position among these three, adding a new layer. And the layer is like, okay, this trade, like for example, there is a railway trade right now. Just give an example. So since I have so much conviction in the names, then and especially if it is giving me a small entry point, a tight entry point, I might then double this to 20%. Okay. So for example, right now the only trade which is 20% for me, I mean close to 20%, is CDSL. So because CDSL I think is a very high probability trade for me right now. There are a couple of reasons for that, but in my opinion, that's so. So you can then bump it up to 20. This is the normal size, and this is a size where like, okay, um, I don't want to, like, sort of miss this run, but it's also a little extended. So it thoda extended hoga, so you cannot then build 10% with a bigger stop loss, right? So but I also don't want to miss it if it like sort of runs up. So then in that case you can go for 5, or the other case where you can go for 5 is like when the market breadth, momentum, stuff like that, the general market conditions are not so great, and in that case one should generally, go with half the average position size. So in that for me is 5%. Okay. So this is the basic principles I try to sort of follow while doing position sizing. Okay. And say again, like, uh, these three would still give you manageable names. Like 5% would give you maximum 20 position, and in a raging bull run, 20% is like still okay, I think, in my opinion. If you make if you make sure that at least 80% of those are, now risk free, and it actually becomes better to then roll them, like forget about them as long as they are above 20, 20, 50, and you can even uh, like trail them for longer, uh, you know so that is my thoughts around that was the my thoughts around position sizing. I hope it made sense. And if it is like too much, like if all of these mental calculations stuff are too much, I would suggest like going first, applying the most simplest approach, one position size, that's it. Like आपने बोल दिया 5%, मतलब 5%. And again, ऐसा नहीं है कि like a stock will only have 5%. Like for example, let's say CAMS. Oh, not CDSL, sorry, CAMS it was. Okay. So let's say CAMS, right? So my first CAMS entry was on this big candle. And let's say you say that your position sizing will be 5%, and like 5% for each trade, right? So you enter 5% here. Then ऐसा नहीं है कि you cannot then enter more on CAMS. So let's say CAMS will again set up. It'll go up, then come down, and let's say some sort of VCP comes, and then you have a clean pivot here above this line. And when this guy is breaking out of this sort of consolidation slash Davos box, you can then add another 5%, and then now you have a bigger size, but you can still think of both of these trades as two separate trades, right? Because they are actually two separate trades. And so that is also one very good way of, I mean, ऐसा ना समझो कि 5% एक ट्रेड माने कि उस that stock will only now can carry 5% of your account. If it's another entry, then this 5%, the next installment of 5%, can be thought of as a new trade. And let's say this guy, my conviction in here plays out, then what I can do is like I can go on adding 5%, or generally less than that. That's called pyramiding, right? So the first position should be the highest, and then on top you then like top up little bit. That's pyramiding, but you can also do like similar 5 into 5 into 5. That's like a little more simpler version, right? So imagine like a stock like BSE. If we would have let's say uh, we would have identified it here, and if we would have added 5% or let's say 10%, and then the next one could have been here or even here, or even like when it was going above here, right? And then some more here. So that's how you increase size on a position, but also at the same time keep your risk less, right? So that is a way. Unfortunately, it is not as easy as I am explaining here. Um, there were times where I could have, it's just a mental thing, and for me personally, I am working towards it. See, like IRFC sweet spot, I caught it here exactly, 20% of the account. I could have added here, I could have added here, but just did not, right? So this is also a process I'm trying to cultivate, and let's see how it pans out going forward. But all in all, 5% multiple position size in a multiple of 5% is a very good way, in my opinion, to size. Okay, I will stop here. I don't have anything else to chat about today. So I'll take some questions. All right, guys, do you have any questions?